Hi, I'm Monk and this is the Monk Way. Let's take a look at Facebook stocks. In this video, I'm going to show you guys exactly how I value a stock. We'll do research, look at Facebook's value, and see if they're a good buy right now. Make sure to subscribe and leave a like if you enjoyed this video. I make them every day. And check out my stock market group below, where I show you every single buy or sell I make in markets. This is the kind of research I put into every stock I buy. These steps are not in order, so you can do your own research in any order you want. Let's start by looking at Facebook's stock price. Here's the 1 year. We can see that they had a huge drop around here, a 20% drop around July of last year, and it kept going down, about 42% at the worst, and now it's recovering a bit at 25%. Obviously there was really bad news or bad earnings reports. Let's go to 5 years. 5 years is looking a lot better. It was up about 200% before the drop, and right now it's up 135% in 5 years. This is still a growth stock. Now let's go to Yahoo Finance so we can use the simple moving averages. These two lines represent the average price over a certain period. Purple for 50-day, red for 200-day. So this is the average price over the 200-day period. We can see that Facebook was very volatile in the past year. Right now they're actually below the 200-day average, but above the 50-day average. This means that in the short term they're still bullish, but they might be having some problems. Now let's go to Market Watch for the earnings history. We can see nice growth in the revenue for the past few years. 43% in 2014 to 2015, 54% to 2016, 47%, 37%, so they had average growth of 45% a year. This is very high growth, and this usually leads to the stock price going up. We can see the profits below. We have 25%, 177%, 56%, 38%, so the profits are going up by a lot too. $22 billion in 2018, almost $16 billion in 2017, and almost $3 billion in 2014. Let's look at the most recent quarter. Revenue of $16.91 billion. This is probably the highest quarter yet, a 23% increase from the last quarter. This is much more than before. Even the net income was an increase of 34%, at $6.88 billion. This is huge growth. Now I want to see their most recent earnings reports. This tells us how they're doing in the short term. A quick look at CNBC's article. Earnings per share $2.38 versus 2019 cents expected. This is a very nice beat. Revenue $16.9 billion versus $16.3 billion. Also a nice beat. Daily active users stayed the same. Monthly active users stayed the same too. But average revenue per user was $7.37. This beat expectations by quite a bit, at $7.11. This increase in revenue per user also increased their profits, a 65% jump from last year's profits. This is a new record for the company. A total of $6.88 billion, and all of Facebook's apps sees 2.7 billion monthly active users. These are amazing numbers. Now let's move on to Facebook's actual earnings report. What we just saw was a summary by CNBC, but there's more details in the actual report. This is for the last 3 months of the year, ending December 31st, 2018. It looks like most of their revenue came from advertisements. $16.6 billion in those 3 months. Payments and other fees are just a little bit extra. Total revenue of $16.9 billion. But it cost $9 billion to run those ads. So total income was $7.8 billion. Operating margin was 46%. This means how much revenue they get to keep after all the costs. So $7.8 billion is 46%. And we have net income of $6.8 billion. Compared to last year, $4.2 billion, on revenue of $12.9 billion. So this is a huge increase from last year. A 61% increase. And for a full year, it was a 39% increase. So we're still seeing huge revenue growth. Daily active users, 1.52 billion, 9% growth year over year. Monthly active users, 2.3 billion, 9% growth again. They have 41 billion in cash. That's a lot of cash. And they say more than 2 billion people uses one of their services every single day. Down here you can see their balance sheets. Their current assets is 97 billion. We want a company with a lot of money, and Facebook is definitely one of those companies. Now the hard part is guessing if the stock will go up in the future. This means guessing if Facebook will keep making more profits and more revenue than last year. Do you think Facebook will keep getting more users in 2019? And will they increase their advertisement money? There's no real way to guess this 100% of the time, but we can look at their history. Here's their PE ratio compared to their stock price. We can see in 2013, the price was about $24, and the PE ratio was 108. This is a very high PE ratio. Once we go to 2015, the price was $104 with an 81 PE ratio. This is still a pretty high PE ratio. In 2018, the PE ratio was 26. This is a little bit more fair, with a price of $159. At the highest point, the PE was 30 and the price was 194. This is right before the drop. When the price dropped down to 131, the PE ratio was its lowest at 17. And right now, we're at 21 PE ratio and 162 in price. And the EPS is actually the highest it's ever been. This means while the profits of the company are growing steadily, the price isn't following along. While the earnings per share was $6.46, the price was $194. This means when the profits are actually $7.57, the price should be over $230 right now. This also means that investors don't have as much confidence, or that the stock could keep going up from here. We saw from the revenue history and the earnings history that this company is actually going up about 30% a year, maybe 25% for the next year. So this EPS is likely going to keep going up, and the price should follow from here. So right now this company is actually a good value. So the next step is to research the stock by reading any recent news. We know from their own earnings reports that they're expecting less revenue for next year, about a 25% increase compared to 30% last year. So is Facebook going to keep growing in the future? They told us that they have 2.7 billion users. This is 35% of the whole world. They have 3 huge apps: Facebook, Instagram, and WhatsApp. Instagram and WhatsApp has not been monetized greatly so far, so there's a lot more revenue to be made. The potential for this company is huge. Right now they're on an uptrend after their earnings reports. We saw an 18% spike in a few days. This means everyone loved the reports. Right now they're still on a 25% dip, at a PE ratio of 21. This is very low compared to technology stocks in general. If you believe in Instagram, which is doing very well right now, second only to Facebook, and you know WhatsApp is a very huge app, then Facebook might be a good stock to watch right now. You want to buy good companies on a discount, and Facebook is on a very nice discount right now. I think Facebook is a great stock to watch right now. I have $10,000 in Facebook stock, and we're down about 6% right now. Make sure to subscribe and leave a like for more investing videos. I make them every day. And check out my stock market group below, where I show you guys every single buy or sell I make in the markets, with my portfolio of over $300,000. Keep watching to buy the best stocks the Monk way.